Picture this, I'm at my favorite coffee shop, latte in hand, scrolling through financial news on my phone. I'm catching up on the latest market trends and economic forecasts, when I overhear someone at the next table say with a confident tone, "Bitcoin is digital gold." It's a phrase you hear everywhere now, splashed across headlines and whispered in investment circles. But what does it actually mean? What are the real implications of such a statement? Gold is tangible, something you can hold in your hand, feel the weight of. It's shiny, valuable, and traditionally locked in vaults, representing security and stability. Bitcoin? Just code, lines of programming, completely invisible to the naked eye. It exists only in the digital realm. How can something you can't touch, something that's purely digital, be compared to one of the oldest, most trusted, and most physically present assets in history? The analogy seems odd, a bit of a stretch at first glance, like comparing a vinyl record with its warm analog sound to a Spotify playlist, instantly accessible but intangible. Yet, digital gold is how many people, especially newcomers, understand Bitcoin's value proposition. It's a bridge, a conceptual link between the old world of physical assets, the traditional stores of value, and the new world of digital ones, the emerging landscape of cryptocurrencies and blockchain technology. But is it just hype? A catchy phrase designed to generate buzz and attract investors? Or is there real substance behind the comparison? Is there a legitimate basis for associating Bitcoin with the enduring legacy of gold? To answer that, we need to break down what makes gold so special in the first place. What are its defining characteristics that have made it a valuable asset for centuries? Does Bitcoin really share gold's core properties like scarcity, durability, and fungibility? Or is digital gold just clever marketing, a superficial label with little grounding in reality? Let's dive in and find out. Before we dive into the world of Bitcoin, it's crucial to understand the enduring allure of gold. For millennia, gold has captivated humanity, serving as a symbol of wealth, power, and stability. Gold's inherent value begins with its scarcity. There's a finite amount of it on Earth, and extracting it from the ground is a labor-intensive and challenging endeavor. The effort required to obtain it only adds to its perceived worth. Beyond its rarity, gold is remarkably durable. A Roman coin, crafted 2,000 years ago, can still retain its luster and shine today, showcasing its resistance to corrosion and decay. Gold has the incredible ability to survive natural disasters and outlast entire civilizations, remaining intact and valuable through the ages. This longevity makes it a reliable store of value, passed down and cherished across generations as a symbol of enduring wealth. Furthermore, gold is universally accepted, easily divisible into smaller units, fungible, meaning one unit is interchangeable with another, and portable, making it convenient for trade and transactions. These inherent qualities have cemented gold's role as a form of money and a medium of exchange for millennia, shaping economies and facilitating trade across cultures. The trust placed in gold runs incredibly deep. It's a trust that has been carefully cultivated and reinforced, passed down through countless generations as a legacy of financial security. Adding to its appeal, gold is also remarkably tough to counterfeit effectively. Even with advancements in technology, experts can readily identify fakes with relatively simple and reliable tests, ensuring its authenticity. These key traits, scarcity, exceptional durability, deeply ingrained trust, and relative ease of authenticity verification, are the fundamental reasons why gold has consistently been regarded as the ultimate safe haven asset, particularly during times of economic uncertainty. It's far more than just a shiny metal that catches the eye. It represents a bedrock of financial security, a tangible asset that has stood the test of time and continues to inspire confidence. So, with such a rich history and inherent value, how does a string of computer code, a purely digital creation, even begin to try and match that legacy? Let's delve deeper and see how Bitcoin stacks up against this formidable standard. Enter Bitcoin. When Satoshi Nakamoto launched it in 2008, the challenge was digital scarcity. Unlike files you can copy endlessly, Bitcoin's code caps the supply at 21 million. Ever. New Bitcoins are mined by solving complex puzzles, requiring real-world energy and effort. This digital proof of work mimics gold's difficulty and cost to produce. Instead of vaults, Bitcoin is secured by blockchain, a public ledger spread across thousands of computers. It's decentralized, nearly impossible to hack, and transactions are permanent and transparent. Bitcoin isn't physically durable, but its blockchain is digitally indestructible. Its value comes from scarcity, security, and freedom from central control. It's a radical new way to define what makes something valuable. 10. Let's put gold and Bitcoin side by side in a head-to-head comparison. We'll examine their key attributes and see how they stack up against each other. It's a battle of the ages, old versus new, tangible versus digital. Both are scarce, gold by nature, a finite resource extracted from the earth. The amount of gold is limited, adding to its perceived value. Bitcoin by code, a digital scarcity enforced by its very design. But Bitcoin's limit is absolute, hard-coded into its protocol. There will only ever be 21 million Bitcoin. Bitcoin wins on divisibility and portability. You can send tiny fractions worldwide in minutes, making it incredibly efficient for transactions across borders. While gold is bulky and hard to move, requiring specialized transportation and security measures, gold's strength is its history, trusted for thousands of years, independent of technology. It has weathered countless economic storms and societal changes. Bitcoin is young and relies on the internet and electricity. It's a product of the digital age. A global blackout would make it inaccessible, highlighting its dependence on infrastructure. Verifying gold takes expertise. You need to know what to look for to ensure its purity and authenticity. Storing it requires vaults, secure facilities to protect it from theft and damage. Bitcoin's authenticity is built into its network, verified by cryptography and a distributed ledger. And you can store millions on a USB-sized device, making it incredibly convenient to safeguard. But lose your Bitcoin keys, and it's gone forever, no help desk. There's no central authority to recover your lost access. Gold, if lost, might be found again, offering a glimmer of hope for recovery. Each asset has unique strengths and weaknesses, presenting a different set of advantages and disadvantages. The real question: which risks are you willing to accept? What aligns best with your personal risk tolerance and investment strategy? Why do investors flock to gold or Bitcoin? One word: uncertainty. When economies wobble or governments print money, people want assets that hold value. Gold has been the classic safe haven, immune to inflation because you can't just make more of it. Bitcoin's fixed supply offers a digital alternative, an escape hatch from endless money printing. But here's the catch: gold is stable, Bitcoin is wildly volatile. Bitcoin's price can soar or crash in days, making it risky for short-term savings. Still, its appeal as a decentralized, scarce asset is strong, especially for younger, tech-savvy investors. Gold is the old guard, Bitcoin is the digital upstart. The debate is about which risks you're more comfortable with: the old system's flaws or the new one's unpredictability. So is Bitcoin truly digital gold? The answer is complicated. The analogy works because both are scarce and exist outside traditional finance. Bitcoin's breakthrough is creating digital scarcity, something you can't copy or inflate. It's not a perfect match. Bitcoin is more volatile, tech-dependent, and much younger than gold, but it's also more portable and divisible. Some investors own both gold for stability, Bitcoin for growth. As our world goes digital, it makes sense to seek a digital store of value. Bitcoin is carving out its own identity as a financial innovation for the internet age. The digital gold nickname sticks because it's the simplest way to explain why code could be so valuable. And that's why the debate and the analogy endures.